Happy Friday and good morning, everyone. Here's your morning market rundown to get you set for the trading day ahead. We're heading into the weekend with a clear theme across markets, a weaker US dollar and mixed risk sentiment. Traders are positioning cautiously as the focus shifts back to potential Fed rate cuts, global political headlines, and the upcoming US data that could drive the next moves. So let's have a look and break it all down. First up, let's have a look at the US dollar DXY, which is now trading near 103.15, which is its lowest level since mid-April. There's a combination of factors weighing in on the greenback: softer treasury yields, more dovish pricing for the Fed, and geopolitical risks. Markets are now pricing in a 72% chance of a rate cut in September, and some traders are even eyeing two rate cuts by the year end. From a technical perspective, DXY has broken below the 100-day moving average, and RSI is holding below 50, pointing to a continued downside momentum. Immediate support is around 103, and a clean break below that opens the door for a move towards 102.35 with a further downside risk if that level doesn't hold. On the upside, 103.5 and 104 are now resistance with no major US data releases today. Focus will be on bond yields and headlines around China tariffs or Fed speakers that could shift some sentiment. Next up, let's have a look at WTI crude oil, which is trading steady this morning, hovering near the 61.30 mark after bouncing strongly off the 56.7 support zone. Yesterday saw a solid reversal after a dip to that level, with price closing just below the 100-day EMA, which is now acting as resistance. Fundamentally, there's been a pickup in demand sentiment. We saw US gasoline demand rise to the highest level in months, and refinery activity is ramping up ahead of the summer. Saudi Arabia's commitment to price stability and potential supply adjustments from OPEC continue to lend support. Technically, if WTI breaks above 58.78, it could target $61, the May high. If momentum fades again, keep an eye on the 56.7 and then the key support zone at $55. We're in a bit of a pivot area. Bulls want a break above $63, while bears are eyeing another test of the $60 or lower levels. Next up, let's have a look at gold, which is currently trading at all-time highs, bouncing back after hitting the 3170 mark this morning. This recovery comes on the back of the broad US dollar weakness and declining treasury yields, which are both supportive for non-yielding assets like gold. We saw a strong technical reaction at 38.2 Fibonacci retracement level around the 3124 mark, and buyers stepped in aggressively from that point. That level now becomes key support. Above here, gold faces no resistance as it's currently at all-time highs and it's broken resistance. From a macro view, gold continues to benefit from uncertainty around global rates, a weaker dollar, and potential geopolitical tail risks. But just keep in mind that the Fed cut expectations are doing most of the heavy lifting right now. If that narrative shifts, gold could quickly retrace back to those levels. Next up, let's have a look at the Australian dollar, which is back on the move, now sitting just above the 62.40 mark, extending gains for the third day in a row. A softer US dollar is the main driver, but there's also optimism around Australia's trade outlook, particularly with EU-Australia talks potentially resuming soon. Technically, the Australian dollar is working its way back towards the 62.66 resistance level. A clean break of that could take us up to 63 cents. On the downside, the pair has built decent support around the 62 level and followed by 61.68. Momentum is still mixed. The RSI is hovering below 50, so while there's upside bias, it's not exactly a breakout just yet. Aussie bulls will want to see a decisive move above the 62.66 mark to confirm the trend. Also, something worth noting is that the iron ore prices have bounced a little, and that's usually supportive for the Australian dollar and the economy. So to wrap things up, the dollar is under pressure, commodities are looking stable, and gold is climbing its way back. Today might be quieter on the data front, but sentiment is fragile. Keep an eye on yields and any surprise headlines that could shake things up. Have a great Friday, and we'll catch you in the next update.